For today's Business Brief, we're joined by Managing Director at Market Economics, Stephen Koukoulas. Stephen, the trade war, the escalating trade war between China and the US comes at a time when our economy is already fragile. So this will pose a significant test to whoever wins the election this Saturday.
Oh, there's no doubt about that, that we saw overnight the Chinese retaliating to the Trump escalation of the US tariffs. So what we've seen is the US stock market fall by more than 2%. The Aussie dollar's back around 69.5 cents. So the market's just really looking at the disruption to global trade that could come from this. And even though we're a little immune here in Australia from the direct effects of China or the US hiking their tariffs, given that China takes a third of our exports, if the Chinese economy is negatively impacted, well then of course that feeds back into our economy. And as you mentioned, our economy is pretty fragile at the minute, and it's the last thing we need is a decline in our trading partner growth.
In the short term, it's going to remain that way until at least June, isn't it? That's when it looks like the next meeting between Trump and Xi Jinping will be.
Yeah, and it's going to continue then, and even assuming that anything is resolved then in a positive sense would be perhaps a bit too optimistic. That I've got the impression that with Mr Trump having, almost 18 months until the next presidential election, that he's going to be wanting to sort of reinforce his legacy. So you can't see him backing down terribly much over the next little while. And of course the Chinese will be keen to retaliate.
But there's locally been news again yesterday of another sharp fall in housing finance, so we might not have hit the bottom yet in the downturn of the property market.
Yes, we saw the housing finance numbers tilting lower again, so for both investors in particular, of course, who are shying away from the property market right now, but also owner-occupiers. We saw another 2% decline in new housing finance commitments. There was a little bit of a positive signal within those numbers. We have seen first home buyers who, of course, have been frozen out of the housing market for a decade or two, just starting to step back into the market. Are we seeing this fall in prices in the housing markets just attracting some first home buyers? There's a hint that that's occurring. Yeah,
are you surprised that Labor basically adopted this policy announced by the coalition on Sunday, sight unseen, no modelling about what impact it might have on the house prices? And given that, we've got some pretty crucial data out this week, wages and employment.
Yeah, well, on the first home buyer scheme, look, I'm one of these people who tends to think that if we can help first home buyers get into the market and it doesn't inflate prices, that there's something that can be useful there. That said, this is a relatively high-risk strategy. You're encouraging first home buyers to sort of maximise their leverage, and of course in a market where house prices are falling, there are risks there. But as you mentioned, I think the last few days of this election campaign, we get some really hot numbers coming out for us economists anyway, that we get the wages numbers tomorrow, wages being a critical issue in the campaign. And then on Thursday, we get the labour market numbers, which will show whether the unemployment rate's still holding around 5%. So if they come out of left field, if the numbers that we see in the next 48 hours are surprises to the financial markets, then they could impact on the final couple of days of campaigning.